Hey everyone, Dan here. It is Sunday night, June 27th. Today we're going to take a look at Lordstown Motors Ride. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, I don't expect there ever to be an issue with the YouTube channel. But for the reason that in case there ever were to be something that happened and we couldn't communicate here on the YouTube channel, and or just as an additional way to communicate with folks, send information out once or twice a week at the most, I'm collecting emails for a newsletter that I'm going to roll out in a couple of months, so nothing imminent, but there's a Google form in the description below if you want to click there and drop your email. I'll stash it away, and when I'm ready to roll it out, I'll send everyone an email and say, hey, I'm going to roll this out, this is what it's going to look like, and if you want to opt out, feel free. But think about that if you would like some additional touch points during the week, some plays, some opportunities that I see, some things to be aware of, interesting things to note, what have you. All right, so Ride I haven't looked at for quite some time, but let's pull back and sort of like the structure of today's video, we will take a look at the chart here and sort of give ourselves some indication of potential price targets to the upside, potential downs or support zones to the downside, and then we'll take a look at some data points that I think are worth at least noting and having in your toolbox, if you will, as they may help in the coming days and weeks ahead. So here's, I was going to say the ride that Ride has been on, no pun intended. That's even too dodgy of a pun for me. But, we see some obvious interesting areas here, like this one, all of this, like resistance, support, resistance, support, resistance, support. So these zones that turn frequently from support to resistance and vice versa, incredibly strong zones. So, it could be potential dip buy areas to look at to the downside. Similarly here, this 1004, this could give you a couple of good catch zones, either to look for price strength and the price bouncing in that range if you are holding, or if you're looking to potentially average down, or if you're not in Ride and you're looking to dip buy, that's what I would look for the time being. Because those are so tight in to where the price currently is, we could throw one more on the board here for good measure. I think right about there, that 981, because that's also relatively close in, I would stretch that down to about here, actually. 963, I think might give a good opportunity for a potential dip buy or support zone if it even needs to come down to that level. In the more immediate side of things, let's see. We have a bunch of resistance here, resistance and support there, resistance and support there, and a bunch of support that was previously resistance there. So not just because that's right where the price is right now, but it's just these prices often will gravitate toward these high supply and demand zones. But 1082 should be the most immediate zone of support for the time being. So that's what I would look for. And then to the upside, if you're looking either to trim, take some profit, lock something in, that sort of thing, these are the ones that I look for to the upside. You can also dip buy into price strength, which I'll talk about in a second, which is another way to dip buy without chasing a stock on its run up. So let's talk about that in a minute. So here's what that would look like. So let's say you like this 1165 zone for a potential dip buy into price strength. What that looks like is, the stock price does whatever it does for a little while, goes up, comes back down, and then eventually it breaks through that 1165. That's not what you're looking to buy on. What it's doing now is it's now in your buy zone, because you're saying, okay, it's showing some level of price strength, some level of life, some level of bullish activity, and I feel like that's what Ride needs in order for me to feel confident taking a position. Now, I'm not saying that this is you or this is every trader, but if you're of this mindset, what you would then do is look for it to hit that 1250, we'll just say, resistance zone or close to it, and start to pull back toward that 1165 support zone. And what your hypothesis is going to be is that it's going to come down from that 1249 into that 1165, and as it starts to show bounce or price strength or support confirming at 1165, then you start your position. If you want to take a little riskier position, what you could do is as it gets to 1190, 1180, something like that, you could start averaging yourself in, because if it went all the way to 1250 and then starts coming back down, it may not come all the way back down to 1165. So give yourself some room. In fact, if you want something like a little bit more methodical, you could pull up your ATR indicator, and right now it's at 21 cents. So you could say, okay, at 21 cents over 1165, so at 1186, I'm going to go ahead, and that's where I'm going to start buying in. Or even like give yourself a little bit of a room beyond that. So you could say 1190, 1195, something like that. But something close to that bounce zone, so that as it comes into it, you're expecting the bounce. Now, if the bounce doesn't happen, that's when you can have like a very tight stop loss underneath that 1165, maybe one ATR under it, so 21 cents below 1165 as your stop loss. That way, if it does come down, doesn't catch that 1165 as support as expected, then you're not on the hook for a huge amount of loss. So that's one way to think about dip buying into price strength. So that's one way you can use those upper price targets. If you don't want to just have, pure take profit, or you're looking for like a longer term play or something like that. But that's what I would look for in the very near term. There is a little bit of a slight up channel here, and it's nothing tremendously accelerated. It's not steep, I guess is another way to say that. But the good thing about it is, to me, it looks like it is steep enough to not be consolidating, because as something consolidates, it still moves slightly up or slightly down, but it's so relatively sideways that that slight up or slight down is just a consolidation move. This to me does look like it's trying to ladder up, and may give itself a breakout above one of these price targets as it starts to catch big areas where there wasn't a lot of buy and sell pressure in between the price points. So, I'd look forward to potentially hold in this channel as well. So that could give you another dip buy opportunity. If you think the channel is holding, you could just dip buy toward the bottom of the channel and then ride it up the channel. Or you could do the old rinse and repeat, which is dip buy the bottom right here. You could have dip bought it at like $10 and sold out at the top at 1150. And now you'd be riding it back down, waiting to take another dip buy toward the bottom and then sell out at the top, and just do it over and over and over and over and over again. And that does also require some patience. So just keep that in mind. So you have to wait for it to get down there. But that's what I would look for on the charting end of things. For the indicators, the RSI right now, just below the midpoint. So this either could make another nice run up into overbought territory. We see that a lot of times if something goes overbought. Actually, you might have seen it here. Goes overbought, comes down just about to the midline. Yep, 50.99, and then makes a second run up into overbought before selling off. And so obviously it made a run up into overbought, coming down about to the midline. So it would need to bounce right around where it is now and make another run up to overboughts as to not get too far down, below the midline, because then it's more likely to just head toward oversold. It may not get all the way into oversold, but that puts it in sort of likely territory to do that. On the MACD side of things, there was a nice bullish range on the histogram here, sort of rivaled this one here, but overall this bullish momentum is dying down a bit because this didn't quite stretch up as high as this one, and this one didn't quite stretch up as high as the previous one. That said, the bearish momentum hasn't really swooped in to take the place of that. So while the bullish momentum is sort of dying down, the bearish momentum is not picking up. So this could still be a good opportunity for the bulls to come in and ride it that much higher. It'll just depend sort of, if there's some sort of catalyst, a news cycle event, short activity, something like that, that sort of, propels this in a direction. But I would say right now it's sort of trending toward flattening itself out and trying to pick its next direction, which could also correlate to it kind of riding sideways to hit the bottom of this channel and then popping up. So that's what I would look for on the trend side of things. Now, before we flip over to the data, side of things, let me just mention a couple of others. In the description below, there's a link to 2 brokers if you're looking for additional brokers to try out. One is the charting software that I'm using right now is Webull. They're also a free broker. They have a really great tools, systems, a lot of different options and opportunities for trading and setting alerts, price targets, take profits, stop loss. Execution price is pretty solid. So, there's a link below if you want to try them out for free. And then Gatsby, which you might not be that familiar with, but I've had them for quite a while. I think they're mobile only, or at least when I first started, they were mobile only, but really modern UI, UX, really smooth, really quick transaction periods. And it's just smooth, easy, but you don't go there to do your charting and all that jazz. I do my charting on Webull, as you see, and then I just go there to execute something very quick when I know exactly what it is that I want. But they do options and shares, and I think spreads also, and they're also free. So that's that. Now, the data. So let me start here first. So, sorry, let me get you in the frame a little bit better. There you go. So Lordstown Motors right here, RIDE, as you can see, is one of the most heavily shorted stocks at the moment, 31.07 short interest as a percentage of the float, so pretty high. And then on the Vortex side of things, it has been coming down a bit, which is proven out also in the daily short volume, which we'll look at in a moment. But as of Friday, Ortex had estimated 22.38% of the float being shorted at that time. So that would be, a pretty solid dip coming down. The one thing to keep an eye on, though, which can cause some bad activity, is this, I should have showed you this utilization rate of 99.7. So it's essentially saying, so it's not quite 100, but if it were 100 means that all shares available to borrow or lend in a lending program have in fact been lent. So this can become problematic if there are people who are trying to short sell and they can't find shares to short sell, or a lender doesn't actually have shares to lend to short sellers, but has short sellers asking for blocks to lend. That can result in some potential bad activity. So something to keep an eye on, but nothing that I am noticing at the moment that indicates that that's happening. But I would just be aware that can have really strong ramifications suddenly, and so that would be one of the first tip-offs. Just as supportive information here, this short volume ratio of 5 that we saw on Friday, and then in the teens, and relatively low to mid-teens most of the days before that, does support the idea that, the estimate is coming down, 22 or so on Friday, down from previously reported 31. So, a big 10% dip nearly, if that's the case, but seems to be supported by a couple of other data providers and slightly different reference points as it pertains to the short volume. But I would keep an eye on that as well as the days go on, because obviously there's still a bunch of interest from short sellers, and that has been that way for a while. So that stuff can kind of drag on a stock for quite some time. All right, well, that'll do it for this one. I really appreciate you watching. If you'd like to share these videos, that always helps a ton. Reddit, Twitter, Facebook, wherever else you share stock stuff, I would appreciate it. And that'll do it. But enjoy the trading week ahead. I wish you the best, and I will see you in the next video.